This is Satya Pradhiman of Cirrus Research. Our latest issue of the briefing is just out. This is a report that summarizes market observations in performance terms and also in terms of key themes that we think are very relevant. The title of this is that the Fed shelves the Greenspan Put playbook. And I think the dramatic sell-off that we witnessed in the month of September and pretty much year to date, we're now technically in a bear market. And a lot of this has to do with the fact that the markets have finally accepted that the Fed is likely to continue to tighten as they fight inflation. In the report, though, we flag a few key themes that are side effects of some of this. One is the much stronger dollar in reaction really to what the Fed is doing, but it's also punishing really currencies around the globe. This segment, though, the chart here relates at the bottom panel the performance of the dollar versus the euro and the pound. And the bottom line is that exporters are getting crushed. And so this upper panel represents the performance of high exporters in the U.S. public markets. And it's been stratified really by large cap segments and the smaller cap market. Both have suffered 10, 15% type of sell-off relative to the other, to the more domestically exposed firms. So one of the points here is that it's not really just about the weak performance, but it's really about what the earnings are going to look like for these exporters in the next few quarters. So we do think this is the stuff that echoes through the sort of peaking of the profit cycle and potentially a harder landing. Following through with this, the idea of quality, we have really espoused this as a way to play protection in this environment. This has worked really well year to date. However, in the last quarter, we've seen higher quality segments really give up some ground. We think this is really just a pause. At the end of the day, the profit cycle is just peaking. It is starting to roll over. It's definitely weaker, let's say, in Asia and potentially even Europe. But the U.S. is definitely going to slow here. It's already begun. So as a result, we think the quality factors, as much as they've paused in this past quarter, we do think the stellar performance we've seen since last year is likely to continue. Another key area that we've written some work on it really are clean energy materials and components. And the idea here is that with the spending on things like EV and solar, as we expect those to really ratchet up, as a result, clean energy components and materials matters a lot more. What is really interesting here is that we've broken these groups out from the report and updated the performance. You'll see that clean energy materials really are being rewarded, while the components, which is a more speculative growth area, has really staggered. And we sort of like attribute this to really the breakdown in innovation shares. The more aggressive growing technologies are really being scrutinized in the marketplace right now, whereas some of the raw materials, the more basic companies that are really in the space, it's clear that the market sees this coming. So we think super interesting times, a real dichotomy in terms of weak markets versus the ability to find areas that are working. As always, take a look at the report. It's the briefing. It's just out. Feel free to follow up with any questions. Thank you.